Greetings to all. This is Neel Parekh, a technical research associate at GEPL Capital. Welcome you to this in weekly market outlook video. In this video, we are going to talk about the Nifty and Bank Nifty current market structure and the levels to watch out for the current August series. And also we'll discuss the two stocks which has a high potential to outperform in the short-term basis. So without any further delay, let's start with the video. So this is a Nifty 50 weekly time frame chart. So in this chart, we're observing that the Nifty has been forming an interesting pattern, which is forming an lower top, lower bottom formation for a fifth consecutive weekly sessions and with a formation of a bearish candlesticks. So rarely it has been formed since November 2023. So it's been interesting pattern which has been formed on the weekly scale, and it has been witnessed a breakdown of its 24,600 channel level that defines the near-term structure remains cautious for the short-term trader. Also, on the weekly scale, the momentum indicator RSI has been showcased a selling pressure, which has been denoted by the bearish crossover, and the current RSI on the weekly scale, it's been sustaining below its 55 level. That defines the momentum for the upside is been getting exhausted, and overall the rebound is been witnessing a strong selling pressure. So overall 24,900 would be an important resistance zone to be taken out for the near term basis. The breakout above 24,900 index could sustain above the level of 25,250 levels, but still the overall near-term trend remains negative. And at a lower scale, 24,400 to 24,200 are likely possible downward momentum levels. Other interesting theory is on the monthly scale has been forming after a fourth consecutive months of positive winning streak. The July series has been ended on the negative front. And on historical basis, the July series seems to be a positive month for the markets for the last 20-month data. But based on the current market scenario, the July series has been showcasing a negative momentum. That defines the historical pattern has been violated on the current month basis. So the breakdown and the sustainability above the below the level of 24,400 could further pressurize the index to the downside of 24,200 and 24,000 level, and as well as on the worst case scenario, it could dip toward 23,800 level as well. But still, the hope is persistent as most of the momentum indicators are on the oversold territory. The rebound is being expected for the next week, but rebound should take as an opportunity to book the long profits and add a short position near the level of 24,850, 24,900. Fresh short position could be entered and with a stop loss at 25,000 level and target at the lower side target of 24,400 and 24,200 level. On the Bank Nifty front, the Bank Nifty on the weekly scale has also witnessed a pressurized scenario where Bank Nifty is also showcasing a lower lows formation for the fourth consecutive weeks now and forming a bearish candlesticks, and it's been dropping below its key short-term averages of 50-day exponential moving average, which has been formed with a bearish candlesticks. And as well as on the weekly scale and daily scale, the RSI momentum indicator has been signaling as caution in the upside momentum. So overall, on the higher side, 56,500 to 57,000 would be the resistance mark, and at the lower levels, 54,750 to 54,500 would be an important support levels for the Bank Nifty now. Now, the two stocks which has a high potential outperform in this current market corrective scenario. The first stock is Shyam Metallic. So it's been interesting pattern has been forming on the across the time frame for the Shyam Metallic stock. On the monthly scale, stock has been forming an higher top, higher bottom formation. And on the July series has been witnessed a breakout of its prior swing high of September 2024. And it's been registered and its life high of 1,001. That defines the robust momentum has been playing around on the long-term structure. On the weekly scale, the prior week has been witnessed a cup and handle pattern breakout, which is a bullish pattern breakout that defines the continuation of the prolonged upward trend. The RSI indicator, which is a momentum indicator, is been hovering near to 65 level. That defines the momentum is sustainable on the stock. So overall, stock has been sustaining above its key short-term and mid-term long-term average as well, which is at 12, 12, 12, 20 and 50-day exponential moving average. And current market prices is at around 973. We can set a target at 1,100 with a stop loss to maintain at 930 level for the effective risk management. Second stock to watch out is Nava Limited, which is code of Nava Limited is NAVA. On the monthly scale, stock has been forming an high top, high bottom formation with the current. If we look at zooming onto the current phase, the stock has been forming and very narrow base pattern on the monthly scale. But zooming onto the weekly scale defines clear out the picture of the positive structure. For the 2 consecutive weeks, stock has been forming a consolidation pattern. Despite the Nifty and Bank Nifty are showcasing a negative sentiment, stock has been forming consolidation phase. So the breakout above 630 would further continue the upside momentum toward the level of 700 and 780 level. And in this case, we have to maintain the stop loss at 585 for the risk management perspective. So these are the things on the current market scenario. It's been building up. Nifty and broadly most of the indices are on the negative front, and momentum indicators are currently at hovering around its oversold territory. So rebound expected would be a short-lived and taken as an opportunity for a fresh short positions for the August series now. So that's it from my side. Hope you like the video. Do share and subscribe to GEPL Capital's YouTube channel, and we'll meet next week. Thank you.